Good afternoon, and this is the Option Pit Trade Idea of the Week. Reminder, this is for educational purposes only. Anything I say or do should be considered just for education. Consult your financial professional. All right, so with that out of the way, let's look at what's going on. Commodities are getting crushed. They're killing gold. They're killing oil. They're killing you name it. And with that, they're taking all the diversifieds down. All right, they're crushing this stuff. So if, just real briefly, if you want to look at like what USO is doing. All right, if you look at a chart of this guy, ugly take. Gold, gold's been in a free fall. All right, world economy's not that bad. There's somebody being liquidated, forcing this stuff out. All right, Exxon Mobil below 80 bucks a share. All right, if I pull up a chart of Exxon Mobil, wait till you see this, folks. You will be surprised when the last time it was this cheap was. Come on. You kidding me? Well, 1 second here, folks. So let's look at the 5-year here. And I mean, the last time it was really kind of into the, into this level. So it briefly got there in June of 2012 during the Greek crisis. And then prior to that, it was for a very short period of time in 2011. And then you can see that's where it had kind of recovered from. And this is like the ugly part of 2011. So we're getting in areas where this thing has gotten, gotten pretty cheap. So they have earnings next week, and you can see the vol's up significantly. But they've got earnings next week. And you can see that they've really, even with this pop in volatility, it's down $1.30 a day, and I could buy the at-the-money call for $1.35, $1.40 for the same move it made today. All right, if I go to August, let's just go to the regular August. The 80 call, now they've got a dividend coming up. The 80 call is $1.70. $1.70. That is too cheap. I'm going to buy one of these calls as a way. I mean, you could do, I don't know that I would do, I'm not going to do a time spread, but what I'm going to do is buy this call, look for a recovery, and then I'm going to turn it into some sort of diagonal play. That is going to be my plan, or I'm just going to play this bounce. So I'm filled, $1.71, and I've got an entire month. I'm at the 4-year low, and I've got earnings next week. Yeah, that makes sense. And it's moved down $1.33 a day, and I paid basically for an entire month of exposure. I paid 40 cents over today's move. Sometimes volatility is not where it should be, and volatility in these oil names is still too low. All right, if I wanted to really firm things up, if I wanted to go inexpensive, I bought that 80 call for $1.71. One thing I could do is sell the 81.5 call that expires next week, so I get the earnings, and I could pay $1 for that spread. Or I could do the 82. So that's something I'll do. I'd rather play the bounce. So what I'm going to do is play this to bounce, and then on Monday, when people realize that this commodity thing is way overplayed, then I will maybe do something against it, or I'll just take my money on this bounce. It's overdone, in my opinion. All right, folks, thank you very much. I hope everybody has a great day and a great week, and I'm looking forward to seeing you guys. and we'll see you Monday. And hopefully I'll see some of you in Chicago next week. Have a great afternoon. Call me, Mark, or email me, mark@optionpit.com for questions. Call us 888-TRADE-01. And again, this was just for educational purposes. None of this should be perceived as investment advice. Thank you.